Well, I wanted to talk about bank to bank because I think to your point, it's interesting, right? There's sort of a cynical read and a more sort of positive or optimistic read. And like the cynical part is, you know, bank to bank payment infrastructure, open banking, the ability for consumers to more easily link these things together, the sort of emergence of e-commerce and the sophistication of e-commerce merchants to seek out lower cost payment rails. There's a rising tide on that side that puts pressure on incumbents, banks and the networks to be able to respond to that and say, oh, no, we're just, we're a network. We're just kind of to your earlier point, we're authorization, right? And like, that's what we do. And we're sort of agnostic to the underlying mechanisms to a degree. And the pressure that's sort of put on them to think more creatively about how their network can provide value, I think that's really important competition. But to your point, the thing that I think is the more kind of optimistic read and how I've always thought about the role that like Visa and MasterCard play in the ecosystem is pay by bank. I like if I think about how I as a consumer would want to interact with pay by bank, I don't want it to work like Zelle at all. Like I like it can't be a Zelle like, hey, this money moves instantly. If you authorize it, it's over, and we were going to take almost no responsibility around this. Like it cannot work that way on a broader scale for consumer-based payments. That's just like not going to work. Obviously, we've seen regulators and consumer advocates and a number of different folks already pushing back just for like P2P transactions around Zelle. Imagine that, but being like 1,000 times worse. Like pay by bank cannot function that way. And so if you think about what's missing, and this ties into, I think, a lot of the announcements that Visa made and some of the work we've seen from networks and issuers around pay by bank is how can we bring that value proposition around authorization? And, I mean, people don't think about Visa and MasterCard this way, but like a lot of it is just we have a complex set of rules that govern every potential use case and edge case around things that might go wrong. And regardless of what happens, we can govern exactly how this is going to work. We have a whole set of rules and monitoring and other things in place to make sure that this is going to be safe for consumers at the end of the day. And that's what drives adoption. And so, yeah, I mean, when I was thinking about, I think Visa made an announcement around like fraud and fraud detection, specifically around pay by bank and that being a part of this and leveraging all the expertise they have around being able to identify in real time fraudulent transactions and being able to score those and give sort of the authorizing parties a heads up on those. Just feels like a lot of the value that they're going to bring to pay by bank, which obviously was also accelerated by their acquisition of Tink in Europe, who they're now bringing to the US, a lot of that is going to be more on kind of network safety, fraud. And then to your point, I hadn't really thought about it this way, the credential piece and making it easy for consumers to interact with this stuff without having to type in their username and password or even necessarily to link their account using username or password. So I think that stuff is going to be really powerful in bringing infrastructure that's missing to pay by bank.
Yeah, I mean, this has always been the challenge of like, what problem is pay by bank solving?
Solving a merchant problem, but not necessarily a consumer problem. Right.
And that's fair.
Yeah.
I think merchants, maybe the best pay by bank, solution today is the Target Red card that really is using card infrastructure, but is drawing funds from my account. But it has the things that a customer wants. It has the convenience of tap. It has a rule system around it. They also have significant rewards. So,
yep.
There's an incentive there. So, I think any consumer payment mechanism is going to have those elements and value to each party. I'm sure you listened to the really fun Acquired podcast a few months ago about Visa and just kind of how those incentives kind of came together and sort of some of the miracles that D Hawk was able to pull off, including kind of, appealing to people's, higher values and putting this network together with his little meeting in Sausalito and his cufflinks. But that's what's required to put together a payment network. So let's take a 5-year view. The next 5 years of pay by bank will probably be continued experiments and pressure from merchants to try to convert customers over.
Yeah.
And look, on utilities, I mean, if I don't pay by bank, like I'm I have to pay significantly more.
Right. Or Uber is giving me an incentive to link my bank account, but then after I do that and get the reward, I never think about it because payments are invisible and who really cares?
Yeah, that's right. And until maybe you have a problem, and then someone's going to say, okay, well, hang on, that wasn't me, or I
Right.
want to dispute this. And so now there is going to have to be some infrastructure to to manage that. So at least for retail payments, there will need to be a set of rules, which is exactly what a network is. In fact, in Europe, the regulators treat the scheme different than processing. So Visa and MasterCard in Europe
Right.
are literally different entities. And the scheme is the set of rules and agreements between the issuing banks and the merchant banks. And the processing is just kind of the system that kind of manages the actual transaction.
One is regulated more as a utility in some ways, right? In Europe, at least.
Yeah, I mean, they have all sorts of regulation. Much of it, I don't think we should import here. But,
Right. But those two things being separate kind of helps you think about
correct.
the different values, right?
Exactly. So think of a scheme, the rules, the chargebacks, the interfaces between the consumer and the point of sale. Think of all of that as the scheme,
right?
And the network being some bank-to-bank transaction. So,
right.
But right now, the current product works just fine. Like as a customer, I'm like, I have something called a debit card. It takes money out of my account.
Right. It all
I
works.
can see it. It's already plugged in. Like I don't see the value of this. Success in payments is about expanding the pie. It's kind of probably one of the best, ways to think about how does payments grow. Is less about versus something, but in addition to.
Right.
So there's $700 billion of rental payments. Okay, that might be something that if the bank-to-bank system was better, like check isn't the best way, to do that.
Right.
And so what does a scheme on top of rental payments look like? Now, Build has just done it on the card networks, which is great. But there may be other ways to kind of think about that. Probably the biggest one is to think through is business payments. I mean, I think this is, today, if you think about the frustrations that people have with payments, like try to do an ACH and do it on a weekend, and these are large sums of money. Sometimes I need to know when it's going to arrive. Like that whole infrastructure should get better. It has gotten better with RTP. It'll get better with FedNow. That's probably the areas where I would think you would start to get traction. But I think we're going to have 5 years of experiments to kind of see how these rules play out. And I would say, Zelle and Venmo and others are also experiments of just what are the problems when you have instant payments and who handles the fraud, and slowly rules emerge.